Hello, Maverick traders, and welcome out to Daily Currency Recap. This is Songit here, and let's break down today's market price action. It's a Tuesday, and it's also the first day of the month, so let's get into it. As always, we'll be taking a look at broader market analysis, and we'll take a look at our currency baskets and what news really affected the markets, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at market analysis, let's just jump right in the headlines. And today was really run on some geopolitical concerns. So just right about the market opened up, we had some news that in the Middle East that Iran was going to attack Israel. So again, that caused that risk-off sentiment in the markets. The equities quickly sold off. We saw the dollar rise, the oil rise, and we saw the growth currencies pull back. So it was a pretty typical risk-off sentiment. So we'll take a look at it and see how we ended today. But overall, it was a decent moving day percentage-wise. There's definitely a decent move across the board. So let's just take a look at percentage change and see what was the best currency today. So taking a look at it today, you can see that markets are very correlated right now with the risk sentiment. You can see that how the yen, the dollar, and the Swiss franc, they held up. You can see that the CAD actually did really well. I'm surprised the CAD had that best performance overall. But outside of that, you can see the Kiwi was the worst performer. We had the Aussie that's pulled back. And we also have the Euro and the Pound pull back as well. So we have seeing, again, I talked about this in the currency room, how I really like the euro is actually breaking down. And it's really confirming that outlook that the euro turning out to be one of the weaker currency. And especially if you look at the counterpart against the dollar, euro is actually underperforming. So overall, it was a risk-off day, and that's about it. If you take a look at the global markets, you can see the exact same thing. S&P down, world stock index were down, cryptos were down quite large. And then we saw the money going into the gold and the money going into the oil. So really driven by some of those fears. And towards the end of the day, those fears subsided and we saw markets sort of come off a little bit here. Now, if you take a look at crypto world, well, they're all kind of down in the negative here. We'll take a look at the charts and see, but overall, we started to like the crypto here, but then this is, again, maybe could be just a buying opportunity here on this dip. Now, as far as the market outlook goes, is anything changed? So let's just take a look at the chart. So the chart tells us to stay bullish as long as we stay above this resistance, which is now the support. So this is, again, an important line in sand here. You can see we are still in this basing formation. Today's candlestick doesn't look good, but this is, again, as long as it stays within that range, it's okay. The only time it will be worrisome if it actually falls back below that range. Now, let's talk about economic data. Now, if you take a look at the economic data, this was a surprise number today. Joel's job opening out of the US, you can see it was a surprise jump. So, we talked about how markets, in the last month have really come bearish on the US economy, the job market. There's a lot of concern. We've seen that in this rate cut that we saw from the Fed. Also, further bets that the Fed's going to cut rates, and then we also have the other economic numbers start to weaken. So we are seeing a bit of a growth or sort of a light in tunnel here that maybe the economic numbers are not as bad. Yesterday we had the FOMC chair Powell speaking. Even he highlighted some of the positive data to the upside. So I think at this point we got to really take a look at, is the dollar really deviating from the fundamentals? Because, by the end of the week, I think we'll have a much solid picture as we go into another employment report. And if that report comes out stronger than expected, I think the dollar has definitely have a decent chance to rise, and so is the bond yields. We'll take a look at it when we get to the charts here. So let's do our currency analysis, and let's just jump right into the charts.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So as you jump into the charts here, we're just going to start with things that actually did well. So again, it's a safe haven currency. You can see that the Japanese yen, which again had a massive reversal on a Friday. You can see that since then it has pulled back and kind of gone sideways here. So the big question really is that, are we going to see another or continued risk off sentiment? So let's just take a look at the S&P 500 and see how we ended the day today. And you can see that we did rally. I mean, here we are. We did rally a little bit here. But the day we are closing, I mean, this is, again, making a bit of a base here. This is a 4-hour chart. It looks like it wants to go down. And again, if you are a big fan of this exponential moving average, what do you see here? You see things are now moving below the moving average there. Again, right now, as you can see, everything is pointing out for the S&P to maybe pull back further. So I think that retest of that prior resistance, which is support now, would be the next step here. So you can see the RSI is kind of falling as well. So this is where I'd like to kind of be on the right side of the markets, which is again risk off sentiment. So in that case, we want to be long the yen, long the dollar, and long the Swiss franc. Now you can see that Swiss franc is not really the one that's trending here. So let's just put Swiss franc on the side here. This is a 4-hour chart. You can see that it's not a promising looking chart. But if you take a look at the dollar made a little bit of a turn here. Again, this is a downward trend line, and we can see that this thing has now come off from those lows here. So I think the dollar could be in the process of trying to carve out a bottom here. Like I said, if the data is supporting, that's really where I want to be going long the dollar. And right now you can see that this thing is, still under pressure, but it could be in the early stages of maybe making a breakout here. I think we're gonna worth taking a look at some of the dollar crosses here. And then we take a look at the yen. Yen again goes in the other top of the list here as well as a safe haven currency. Now, what do you want to sell? Well, I highlighted euro in the currency room, and you can see that this thing has now officially moved below the support. You can see that this was a crucial support level, and the next support level is right going to be around here. So there's still for this thing to room. There's still definitely more room for this to fall. Weekly chart pointing at the downside, daily chart pointing at the downside, 4-hour charts pointing at the downside. So all those charts are lining up, which is again a great sign. Now the British pound, is it following suit? I mean, it looks like it is following suit here. You can see that the pound never really broke out here. So I'm bearish on both the euro and the pound, but I think I like euro much better compared to the pound, or even compared to the Swiss franc, which is sideways. I think euro is the one that's showing the most weakness. Now, after the euro, let's see what the CAD is doing. You can see that the CAD had a nice little run. I mean, I must say that the CAD overall, is this really bottoming out here, or is it what the dollar is doing? I think it's what the dollar is doing here. There's definitely a lot of back and forth right now, but overall, I think we've seen how dollar and CAD can take turn. So maybe there's just one of those scenarios. But as far as the trend goes, CAD really hasn't turned the corner yet until it really breaks and start to make some new highs. Now, where is the money going to come out of if we start to see some growth currencies appreciating? I think the first thing is Aussie, and then second is Kiwi. So let's talk about Kiwi. Kiwi made a bit of a nice turn yesterday. Again, this is a nice sort of a reversal off the breakout. Remember, this is a breakout period here. We did break out very nicely, and now we are back within that range. So this is, again, right at this exponential moving average. This is by the parabolic SAR. The RSI is already moving lower, but if this start to break lower here, this is where we need to start, get a little bit more bearish on the Kiwi. So yesterday I read some reports that, again, they're expecting RBNZ to raise by 50 basis points in their next meeting. Again, that's going to fuel some of the bets, as we have seen how the market likely to price things in from before the news comes out. I think in that case, this one looks better to me on the short side here. And then again, Aussie looking similar, but you can see that the Aussie looks a lot more stronger unless, it really breaks below this here. Again, I won't be surprised. Eventually, again, if the risk off sentiment continues, we'll probably see both the Aussie and the Kiwi weaken here. This is a little trend line here. If it falls below it, I think we can turn short on the Aussie as well. So let's just take a look at the setups here. So based on what we just discussed, Kiwi dollar, and you can see that Kiwi dollar, it's right. Again, this is the daily chart. You can see this is a prior resistance. It's now support. Again, if you want to be looking for a short setups here, again, what we're going to look for is some basing patterns and it just falls below it. I like the setups here on a 4-hour chart. Again, the line of sand here is 62.58. If it breaks below the support, I like this on the further downside. We can also take a look at Kiwi against the yen, and I think the setup probably be similar here. We got a support right here, a break below that. I like it for the downside as well. We can also take a look at euro on the short side, and you can see that on the daily chart, euro dollar, it's definitely heading down to a $1.10 and even down to $1.09. I think this is the next level of support coming in for the euro dollar. We can also take a look at euro yen, and that kind of looks similar as well. So I'm pretty clear on what I want to buy and what I want to sell. I think it's just a matter of finding that confirmation. So just watch the, you can always watch the futures overnight. If this weakens overnight, we'll probably see a continuation of that risk off sentiment. If it stays, if it recovers, then we'll probably see those things back off. So we'll find that out when that happens. So in conclusion, we're looking for some risk off sentiment to continue, especially if there's further escalation in the Middle East. Remember, this happened overnight over there. Now Israel is going to come out. They're going to talk about, some of getting back at them, do something, escalate something. So I think that's something you got to watch out for. But again, as always, play relative to the weakness. And when things shift, make that shift with the markets. That's what I would say. Always do in the markets. Thanks for joining. See you in the next trade.